Subscribe to my channel Report Stock.
Have you ever glanced at a company's quarterly report, seen a headline about an earnings beat, and then kind of found yourself wondering, what's really going on beneath the surface? Does beating expectations automatically spell good news for a stock? Or, is there a deeper story to uncover? Today, we're embarking on a crucial deep dive into Copart Inc., ticker CPRT. They just released their latest Q4 earnings report.
Yep.
Our mission is pretty clear. We'll dissect their recent financial performance, trace their stock's trajectory, peer into their future outlook, and crucially, embed all of this within the essential context of their industry.
Exactly. And for this deep dive, we've gone through our source material, Copart Q4 earnings beat, future outlook and performance, to really pull out the important nuggets. Think of it as your express lane to understanding what genuinely matters in these reports. It helps you cut through some of the noise.
Right. By the time we wrap up, you won't just have facts about Copart. You'll gain, hopefully, a sharper lens for interpreting financial news, a clearer understanding of market dynamics, and the ability to connect seemingly disparate pieces of information into a cohesive, informed picture. So let's jump right into Copart's latest numbers. Okay, kicking things off with the headline that grabbed attention. Copart announced quarterly earnings of Euro 41 cents per share. Now, this is a solid beat, impressively surpassing the Zacks consensus estimate of $0.37 per share. That translates to an earnings surprise of over 10%, which sounds great on the surface.
It does sound great.
And just to quickly clarify for anyone maybe new to these terms, the Zacks consensus estimate is basically the average forecast from all the analysts covering the stock. It gives us a benchmark of what the market expected.
Exactly. And this isn't just a number. It's part of a narrative. While an earnings beat certainly sounds positive, the company performed better than analysts expected. On average, the real deep dive starts when we look at the implications. With Copart, that 10% surprise is indeed positive, but its historical context is, equally telling. The company has only surpassed consensus EPS estimates 2 times over the last 4 quarters.
Okay.
So while this quarter was a strong beat, it kind of hints that they're not consistently exceeding expectations on this specific metric. It's not like a regular slam dunk every time.
That's a really crucial distinction. It's not just about one quarter in isolation. But here's where Copart's story takes an interesting turn, right? While those earnings certainly beat expectations, the revenues for the quarter ended July 2025 painted a slightly different, maybe more nuanced picture. Copart posted $1.13 billion in revenues, which actually missed the Zacks consensus estimate by 1.85%.
Yeah, a miss there.
Now, to be fair, that $1.13 billion is still an increase from their year-ago revenues of $1.07 billion, so there's underlying growth happening. But it was still a miss against what the market had anticipated. So it leaves us with a bit of a mixed signal right from the start, doesn't it?
It really does. And what's truly fascinating here is precisely that mixed picture you mentioned, an earnings beat coupled with a revenue miss. This contrast, it can suggest a few things to an investor. It might indicate the company managed costs exceptionally well. Perhaps they optimized operations significantly.
Better efficiency, maybe?
Could be. Or even had some one-off gains that boosted the bottom line, without a corresponding surge in top-line sales. Think of it like a restaurant that made more profit not by serving way more customers, but maybe by becoming incredibly efficient with its ingredients or labor scheduling.
Okay, that makes sense.
And much like their EPS trend, Copart has topped consensus revenue estimates only 2 times over the last 4 quarters as well.
Same pattern there, then.
Pretty much. This pattern points to, let's say, a bit of inconsistency in hitting analyst targets across both key financial metrics. That definitely gives us more to think about beyond just the headline numbers.
You've really highlighted something crucial there. So, okay, earnings beat, revenue miss, historical inconsistency. But here's where the plot thickens even further, and this is quite surprising. Despite that recent earnings beat, Copart shares have actually lost about 16.2% since the beginning of the year.
Wow, yeah, it's significant.
Contrast that sharply with the broader market, where the S&P 500 has gained a healthy 9.6% over the same period. This raises a really crucial question for you, the investor. Why the underperformance when they just announced an earnings beat? Is the market simply missing something obvious here? Or are investors seeing, a deeper current pulling Copart down?
Yeah, it's rarely that simple, is it? And you're hitting on the core puzzle. While a beat seems positive on the surface, the market is inherently forward-looking, always looking ahead. What analysts expect next often overshadows a past win, no matter how good it was.
right? The what have you done for me lately mentality, but for the future.
Exactly. And this is where the concept of earnings outlook and earnings estimate revisions becomes a truly reliable measure, arguably, for understanding near-term stock movements. Empirical research shows a pretty strong correlation. When analysts revise their future earnings estimates upwards, it can powerfully influence a stock's trajectory. It signals improved prospects.
And the reverse is also true.
Absolutely. Conversely, downward revisions often suggest headwinds are coming. It's like a forward-looking barometer that helps us gauge collective sentiment about a company's future prospects, often more so than just looking in the rearview mirror at past performance.
Okay. And to help us navigate these crucial revisions, our sources point to a specific tool. The Zacks rank. They highlight it has an impressive track record for harnessing the power of these earnings estimate revisions. It acts as a kind of compass, right? Distilling complex changes into a straightforward signal.
That's a good way to put it, yeah. A compass.
So ahead of this latest earnings release, the estimate revisions trend for Copart was described as mixed. What signal did analysts send about Copart's near-term prospects even before this latest report came out? What does a Zacks rank #3 truly signify for you?
That's a key point. A Zacks rank #3 for Copart is designated as a hold. What this signals in this situation is kind of a fascinating market equilibrium. It means that, based on the current estimate revisions at that time, the shares were anticipated to perform broadly in line with the overall market in the near future.
So not expecting it to race ahead, but not expecting it to lag badly either.
Precisely. It's not a strong buy signal, nor is it a sell signal. It reflects a collective analyst perspective that, at this moment, sees no immediate strong catalyst for significant outperformance or dramatic underperformance. It's kind of a snapshot of consensus in a holding pattern, which often means the market isn't yet seeing a really compelling reason to drastically re-rate the stock, either up or down.
Understood. So it's a wait-and-see signal from the analysts, perhaps reflecting that mixed earnings picture we talked about. Now, shifting our gaze forward, what are the current consensus expectations for Copart's future performance? What are the experts projecting now for the road ahead?
Well, let's look at the numbers.
For the coming quarter, the consensus EPS estimate is currently sitting at $0.42, and that's on expected revenues of about $1.24 billion.
Okay.
And looking out further, for the current fiscal year, analysts are looking at $1.73 per share in earnings on $5.06 billion in revenues.
Right. It'll certainly be interesting to see how those estimates might shift in the coming days and weeks, especially given this latest report and our discussion about revisions.
Definitely something to watch. Now, let's zoom out with this for a moment, because as we know, Copart isn't operating in a vacuum. The broader current of its entire industry might be one of the most powerful factors shaping its future. This is where it gets to a truly deeper layer of analysis, I think.
Absolutely. Context is key. When we place Copart within its industry, we see it belongs to the Zacks auction and valuation services industry. And here's a really powerful insight from our source material. This industry is currently positioned in the top 40% of the 250-plus Zacks industries.
Top 40%, that sounds pretty good.
It is pretty good. This isn't just a casual ranking, it's potentially a significant indicator. Our research, the research cited, shows that the top 50% of Zacks ranked industries tend to outperform the bottom 50% by a factor of more than 2 to 1.
Wow, 2 to 1.
Think about that for a moment. Imagine trying to paddle a canoe upstream versus downstream. A strong industry acts like a powerful current, doesn't it? It can propel companies forward, even if their individual paddling, let's say, isn't perfect.
Yeah, that's a great analogy.
This industry insight often proves to be a massive aha moment for investors when considering a company's potential. It suggests there's a strong tailwind here that even some individual company hiccups might struggle to fully counteract.
That analogy of the canoe really helps understand that momentum. So, considering Copart's individual performance and outlook, that earnings beat, the revenue miss, the hold rank, and the year-to-date stock underperformance, how does this strong industry ranking truly change your perspective on its potential moving forward? It undeniably adds another crucial dimension to the story, doesn't it?
It absolutely does. It complicates the picture, but in an important way. You have company specifics pointing one way or mixed ways, and an industry trend pointing another.
Exactly. And to truly put Copart's nuanced situation into perspective, sometimes it helps to look at a contrasting storyline, even within the same broad sector. So let's briefly turn our attention to Skillsoft Corp, ticker Skill. They're another company from the broader Zacks business services sector.
Okay, a comparison point.
Skillsoft is expected to report results for their quarter ended July 2025 around September 9th.
Okay.
Coming up soon. Here's what analysts are projecting for them. Skillsoft is expected to post a quarterly loss of $2.10 per share.
A loss. Okay.
Now, while that's obviously a loss, it actually represents a year-over-year change of positive 12.5%. So the loss is getting smaller compared to the previous year.
Ah, so improvement, even within a loss.
Potentially, yeah. For them, that could be seen as a sign of improvement. It's also worth noting that the consensus EPS estimate for Skillsoft has remained unchanged over the last 30 days. That suggests a fairly stable, albeit negative, outlook from analysts recently.
No recent shifts in sentiment there.
And on the revenue side for Skillsoft, revenues are expected to be about $129.24 million. That's a projected decline of 2.3% from the year-ago quarter.
Okay, so a smaller loss, but also declining revenue. A different kind of mixed picture. What this glimpse at Skillsoft highlights isn't just, different numbers. It's a stark reminder of how diverse company fortunes can be, even within the same broader sector. Here we're talking about an expected loss and revenue decline, signaling a company facing perhaps different kinds of challenges than Copart. While Copart presented that mixed bag, earnings beat, revenue miss, hold rank, strong industry, Skillsoft seems to be navigating maybe more direct headwinds with that revenue decline. This comparison just underscores how crucial it is to dive into the specifics of each company. You need to understand that even general sector trends don't guarantee uniform performance across all players. It's never just a blanket statement, is it?
No, absolutely not. And that really brings us to the core of what we've unpacked about Copart today. We've tried to go beyond the headline, observing its mixed Q4 results that earnings beat tempered by the revenue miss. We've critically examined its stock's curious underperformance year-to-date, despite the earnings beat, and understood the important context provided by its Zacks rank #3, signaling it's expected to perform well in line with the market. And crucially, we've placed it within its highly ranked industry, a significant factor often overlooked but potentially vital for its long-term potential.
So, what does this all truly mean for you as you navigate the financial landscape? Well, it means understanding a company's financial health isn't just about one single number, like an earnings beat you see in a headline. It's about looking at the full mosaic. The earnings and the revenue, the stock's actual performance against the broader market, analyst sentiment captured by tools like the Zacks rank,
And the industry.
and perhaps most importantly, the overall health and momentum of its industry. Each piece adds a vital layer to the picture, allowing you, hopefully, to move beyond simplistic narratives.
Exactly. So, given all we've unpacked about Copart, a strong industry tailwind, but a kind of mixed individual outlook, and that recent stock underperformance, what other layers of information would you seek out now to form your own truly comprehensive view? Maybe management's commentary on the earnings call, competitor performance, specific economic indicators relevant to auctions.
Good questions.
And how might this multifaceted approach apply to the next company you encounter in the news? Helping you move beyond just the headlines to truly understand what's going on behind the numbers. It's really about building that critical lens for every investment story you encounter, isn't it?
Subscribe to my channel Report Stock.